If you're over 30 and thinking seriously about retirement, Charlie Munger would say this is exactly the right moment to stop chasing clever tricks and start focusing on wisdom, because according to Munger, the biggest threat to long-term financial security is not bad luck, it's bad decisions repeated consistently over time, and today we're going to look at 5 proven ways to secure your retirement for 30-plus years, completely aligned with Charlie Munger's philosophy, while also exposing the common mistakes he repeatedly warned people about. Charlie Munger believed that retirement success starts with understanding reality, not hope. Most people plan retirement assuming average returns, stable markets, and perfect behavior, but in the real world, markets crash, emotions take over, inflation eats quietly, and people make mistakes. Munger often said, the first rule of compounding is to never interrupt it unnecessarily, yet people interrupt compounding all the time through panic, lifestyle inflation, and poor incentives. The first proven way to secure retirement, according to Munger's thinking, is to focus on long-term ownership of high-quality assets, not speculation. Munger despised gambling disguised as investing. He believed most people would be better off owning a few wonderful businesses for decades rather than constantly trading. For retirement, this means owning productive assets that generate real economic value year after year, businesses with strong moats, pricing power, and the ability to raise earnings faster than inflation. The biggest mistake here is confusing activity with intelligence. People think frequent buying and selling makes them smart, but Munger argued that sitting still while great businesses compound quietly is often the winning strategy, especially for retirement. Time is your ally only if you allow compounding to work. Every unnecessary move, every emotional decision, every attempt to outsmart the market weakens your long-term outcome. The second proven way is keeping expenses brutally low and avoiding lifestyle inflation. Charlie Munger lived far below his means his entire life, not because he had to, but because he understood the power of simplicity. He often emphasized that saving money is easier than earning it, because each dollar saved can work for you forever. Retirement security improves dramatically when you keep your required lifestyle modest relative to your assets. The most common mistake is assuming future income will solve today's spending problems. Munger believed that self-control is one of the greatest competitive advantages in life. People who constantly increase spending as income grows push retirement further away without realizing it. A lower expense base gives you flexibility, reduces stress, and protects you during market downturns. A person who needs less is automatically richer in a Munger sense. The third proven way is protecting against inflation through ownership, not fear-based safety. Munger was clear that holding too much cash over long periods is dangerous because inflation silently destroys purchasing power. He disliked investments that felt safe but guaranteed loss after inflation and taxes. For retirement lasting 30-plus years, your assets must grow faster than inflation, or you are slowly moving backward even if numbers look bigger. The mistake people make is hiding in fixed income products because they are emotionally comfortable, but Munger taught that real safety comes from understanding risk, not avoiding it blindly. Owning businesses, real assets, and productive investments provides inflation protection because prices, earnings, and cash flows tend to rise over time. Fear-based conservatism early in retirement can be more dangerous than controlled exposure to growth. The fourth proven way is preparing for worst-case scenarios instead of average ones. Charlie Munger was famous for inversion. He would say, "Tell me where I'm going to die so I won't go there." Applied to retirement, this means planning for high medical costs, long lifespans, market crashes, and unexpected expenses, not assuming everything will go smoothly. The huge mistake is pretending healthcare and long-term care won't matter. Munger understood that one major medical event could destroy even a good financial plan. Planning early for healthcare costs, insurance gaps, and emergency buffers is not pessimism, it is rational realism. A retirement plan that fails under stress is not a real plan at all. The fifth proven way is having a rational withdrawal strategy that respects human psychology. Munger understood behavioral risk better than most investors. He warned constantly about fear during crashes and greed during booms. In retirement, withdrawing blindly without regard to market conditions increases the chance of failure, especially when bad markets hit early. The mistake many retirees make is believing retirement is passive. Munger believed good decision-making never stops. A flexible withdrawal approach, using income streams first, avoiding forced selling in downturns, and maintaining discipline adds enormous durability to a retirement plan. The goal is not maximum spending, but maximum survival with dignity and peace of mind. Charlie Munger also strongly believed that avoiding stupidity is more important than seeking brilliance. Most retirement failures are not caused by low intelligence. They are caused by bad incentives, emotional reactions, and ignoring basic principles, overspending, panic selling, chasing hot investments, and overconfidence late in life are predictable errors that ruin long-term outcomes. Another key Munger lesson is patience. He believed that time favors the disciplined. People underestimate how powerful steady compounding is over 30 or 40 years. Small improvements in saving rate, cost control, and decision-making create massive differences later. Retirement security is built slowly, then appears suddenly to those who stayed patient. Munger was also brutally honest about human limitations. He didn't believe most people could beat the market consistently, which is why he favored simple, rational approaches. Retirement plans should reduce the need for constant decisions. Automated investing, diversified ownership of strong businesses, and clear rules help protect people from themselves. Taxes were another area Munger respected deeply, not emotionally, but mathematically. Minimizing unnecessary taxes through smart account structures, long holding periods, and thoughtful withdrawals increases net returns without taking extra risk. Munger saw tax efficiency as part of rational behavior, not cleverness. He also emphasized independence of thought. Blindly following media headlines or social trends leads to poor investment decisions. Retirement planning based on fear or hype is fragile. Sound plans are quiet, boring, and built on fundamentals. They do not require constant reassurance from the outside world. Legacy thinking mattered too. Munger believed wealth should serve a purpose, not become a source of conflict. Proper estate planning, clear intentions, and simplicity protect families from unnecessary problems. A well-structured plan respects both prudence and clarity. At its core, Charlie Munger's approach to retirement was about rational behavior maintained over long periods, not magic formulas. Secure retirement for 30-plus years comes from avoiding obvious mistakes, owning productive assets, controlling costs, respecting inflation, preparing for adversity, and maintaining emotional discipline. If you are in your 30s, Munger would tell you that time is still heavily on your side, but only if you avoid stupidity early. If you are in your 40s or 50s, he would say discipline matters now more than ever. It's not about catching up through risk, but tightening behavior and reducing errors. The tragedy Munger often pointed out is that most people fail not because success was impossible, but because failure was predictable. They ignored warnings, chased comfort or excitement, and avoided uncomfortable truths. The good news is that wisdom is learnable, and most financial mistakes are avoidable. If this video helped you see retirement through the lens of Charlie Munger's wisdom, make sure to subscribe to the Stock Predictor channel, where we focus on rational investing, long-term thinking, and avoiding costly mistakes. Share this video with someone over 30 who wants clarity instead of hype, and let us know in the comments which Charlie Munger principle changed the way you think about retirement.